Good morning. Welcome back to the Retirement Report. I'm Hank Parrott, your host. You know, we were talking about cryptocurrency this morning and getting into an area that this is the first time we've ever even attempted this, but it's mainly because I was seeing so much interest in these, in Bitcoin and in other cryptocurrency, and clients and friends and family even asking about, is this a good idea? And one of those areas, they're looking for some type of endorsement, for instance, about this type of investment. Well, when it comes to that, I don't. I mean, to me, any kind of speculative investment, and it goes the same with precious metals, I view in the same way. In a well-diversified portfolio, we're going to have companies that already, that are in that market, or that are in that, represent that category, that asset category. So with regard to precious metals, companies that use the end product, that are maybe mining the ore out of the ground, and on all different aspects of that, so you're covered. You don't need to necessarily go out and buy a bunch of gold coins. And one of the reasons that people do this is they're of the mind that if there's some catastrophic event, that somehow gold, having this gold is going to allow them to go get a loaf of bread or something. Well, I would say, better to invest in lead. Okay, and by that what I mean is, I'm gonna, if the world ever got that bad, I'm gonna need a farm somewhere, and I'm gonna be hunting. I need a gun to go hunt my food and grow it out of the ground and those kind of things. So I don't see that as being something I'm overly concerned about at all. And actually, so I'm not going. I look at it then as an investment, and as an investment, again, very highly volatile, and I'm going to do better in the stock market typically in the way that I invest there. So when it comes to the way this endorsing of a speculative investment, like any type of cryptocurrency, even Bitcoin, where you have that tremendous amount of volatility, it just does not fit with the kind of investing that I talk about here, where we're looking to basically grow your money, stay ahead of inflation and taxes, protect the purchasing power of your money, but at the same time, we don't want to take a lot of undue risk. And this is one of those areas, Frank, that we were, with regard to some of the way these advertisements work, where they're intimating in some way that there's a government guarantee behind this. Yeah. Or approval.
Yes, be extremely cautious of that, because it's highly unlikely. It's not going to be sponsored or approved by the IRS. Yeah. And the other thing I would like to mention in terms of endorsements, we see a lot of these ICOs that have a celebrity attached to it, a celebrity endorsement, and that's something to be a little cautious of as well, because if there is a celebrity endorsement, there has to be a disclosure of on the the offering itself, indicating if so and so was paid, or how much they were compensated for their endorsement. So be aware of endorsements.
Exactly. Many times with these celebrity endorsements, they're basically approached. They may be told some type of, here's how this works. And you see these on all kinds of things. Reverse mortgages, different type of, precious metals is another one I see quite often. And now they may legitimately even, own or do these things themselves, but they're not investment advisors. They're not out there. They're not fiduciaries, certainly. They're not there to act in your best interest. They're being paid to endorse a product. They maybe believe in that to a certain degree, or to what degree they understand it, and that may be part of that, I suppose. But you need to understand it, not just that they do. And when it comes to cryptocurrencies, even more so. That's even riskier in terms of having to understand how those things work, what your actual risks are in terms of loss of capital, and of course the fraudulent issues, the safety aspects of it, understanding, how to protect yourself there. Think of it, if you were buying, gold coins as an example, you're going to have a safe, right? You're going to put those somewhere where you're going to have some level of security. To understand with cryptocurrency, what's the safe? Where does it put that it's safe? And if you have a problem, who do you call, right? Or who do you go to? And that's one of those areas, understanding that it doesn't work, the way the things you're maybe used to work, such as currencies or precious metals or whatever. Those things you understand more. Don't associate the two together. They're totally different. This is where millennials, I guess, have that protection. Baby boomers, so next millennials are the next ones particularly subject to fraud in this area. And I imagine they're a bigger target because they got more money.
That's true. And baby boomers are investing in cryptocurrency. It's not all millennials.
Right. So they're seeing it as, oh, look at, maybe they're being told by their millennials.
That's exactly right. I've heard so many stories of someone saying, my son who's in college is on me to invest in cryptocurrency, and oftentimes they do make that investment based on their 18-year-old's advice.
Right. So. This is one of the, and which is, I mean, that could be. There are a number of times I've had clients come in and told me that their son or their daughter said, hey, this is going to be, this next big thing. And not just cryptocurrencies, but other things like certain companies, tech companies and that they've said, you should put that money in. There could be, again, it's about how you invest, or what kind of money, what money you're putting in there. Again, is money that you can afford to lose when it comes to anything that's that volatile or speculative in nature. Just, beware not to put the nest egg in there. I'm going to throw again to the first 10 callers to my office. We'll get one in because I missed it the whole first half of the show. First 10 callers to my office, 615-376-5325. Tess is standing by. She'll get your information. We've been talking about cryptocurrency. If you got more questions about that, I've got some things, some materials I can share. And again, through the State of Tennessee Department Division of Securities Division, you can get additional educational materials about this. And to start that process, if that's something you'd like to pursue or have some interest in, then again, educate yourself and understand it, and at least come at it from an informed standpoint. Again, first 10 callers to my office, 615-376-5325. Free retirement income analysis, comprehensive financial plan. We're going to be talking about your taxes. We'll be talking about Social Security, Medicare, how those work, how to maximize those benefits, how to understand too about taxation of those benefits, understanding how required minimum distributions work, what the differences are there, right? If you don't take that money out at 70.5, guess what? A 50% penalty. That's a pretty hefty penalty. So you want to avoid that. You want to make sure you're taking those required minimum distributions. And here's another one. Be thinking, when I do these investment these comprehensive financial plans for new clients, what we're looking at is if they're not taking required minimum distributions, but it's something coming out 5 or 10 years from now, as an example, we're going to do the math for them and determine, well, how much are those IRAs going to be worth at that point? What's the required minimum distribution going to be? How much is it going to impact their taxes? Is there a way maybe that we could do some Roth conversions or some other strategies where we could reduce future RMDs, which would then reduce future taxes at that time? In particular, thinking of this, if you're in a 12% bracket, which for a married couple over age 65, you're talking about $103,000, $104,000 this year for 2018. So if you make more than that, right, then that means your adjusted gross income is more than that. That means you're going to jump into a 22% bracket. So you could be taking you could be taking money out of an IRA taxed at 12%, but if you had to take more out through, say, because of a required minimum distribution, and all of a sudden those monies are taxed at 22%, think of that. That's a huge jump over. That's like what is that? Almost 100%. I'm doing the math in my head here. Almost 100% jump in terms of your taxes. Wow. And if we did a little planning and we say, well, we can take some of that IRA money and either take distributions or do Roth conversions and reduce the RMDs, we could maybe keep you in a 12% bracket and reduce those taxes. There are other strategies like that we do when we're talking about taking a look at your comprehensive plan. So again, first 10 callers, 615-376-5325. Tess is standing by. She'll send you out a checklist of things to bring to your appointment with me. And when you come in to see me, I'll give you a free copy of my book, 7 Steps to Financial Freedom in Retirement. Okay, did you say we need to take a break? We do need to take a break. When we come back, we'll get into the cryptocurrencies a little bit more. And, we'll talk more. This was on the IRS message. We're just talking about IRS does not endorse things, okay? So if you're seeing that type of thing or believe in that, don't believe it. Don't believe it. More warnings, more when we come back about cryptocurrency. Join us here. We'll be right back on the Retirement Report.
You're looking for an